But Arun Thukral, MD and CEO at Axis Securities, joins in for a quick chat in the markets. Arun, hi, morning. Just analyzing how beneficiary really is this capital infusion which was announced last evening by the government in PSBs, and 12 of them really is. Would you say that this can really resurrect the banks, or is it more a band-aid approach?
Morning. So it's a good step that the capital infusion is happening, and it was obviously overdue, and this is going to help these banks. And now, because of the better credit culture and the credit opportunities, the growth has to be better than what it was. But on a longer term frame, at an Axis Securities, we are still more bullish on the private banks, and private banks with the retail focus as well as the private corporate bank. Between the two, we'll still prefer private banks.
All right, Arun, that's the take when it comes to the banking space. But how are you looking at the overall setup for the infrastructure sector? Yesterday, in fact, we had quite an interesting discussion on some of the challenges that still present themselves within the infrastructure space and whether or not we are actually seeing things on ground improve. In light of the reforms and the kind of policies that have been taken by the government, the overall macro environment, is your take that the tide is going to turn for infrastructure? What's the sense?
Again, as on infrastructure also, we are kind of a neutral strategy, because obviously the kind of allocation in the last two budgets, and this being an election year, again there is a lot of focus on building good infrastructure, and if the country has to progress, the infrastructure has to be world class. But what we feel that it will take time, that infrastructure should come out on its own, and maybe as a stock market perspective that somebody should invest in infrastructure. We are obviously more bullish on many other sectors where the opportunities are much better.
Okay, fair enough. Give us a sense as to what the outlook is when it comes to the oil and gas space. Yesterday there was news as well coming out that Aramco is closely looking at making some big investments. They're bullish on, the refinery space as a whole. How are you looking at the overall prospects shaping up for oil and gas? Would you be recommending any specific names?
No, we are not recommending anything in the oil and gas space. Again, over a period of time, what we have seen that at some point of time that the companies does well, and sometime there are some kind of adverse movement in the crude oil prices and all, and we have seen that kind of things are passed on to these companies, and sometimes they take some kind of a subsidy burden, although it's more or less now on its own. But there are regulatory challenges at some point of time, and that's why I think we are not that kind of very bullish on this sector. Again, I said that there are a lot of other sectors, lot of other opportunities where we would like to put our money or investors' money. So I think again here also we take a very neutral approach as of now.
Arun, we were just chatting with the management of Minda Industries and just trying to analyze the impact of the auto slowdown and how it's affecting the OEMs as well now. But do you believe for stock prices this decline is to be bought? Because the sense that we got was that perhaps a revival is in the offing, and another 3 months post-elections we should see slow, sales actually picking up.
Yeah, so whatever numbers we have seen in the recent time of OEMs and even auto ancillaries has not been great. Even the Maruti numbers were not that great. So there is some kind of a slowdown, and we have taken a neutral approach. Earlier we were very bullish over the last few years, but this year has not been that great. But I agree to some extent with you. Maybe over a period of time the growth can come back, maybe the better monsoon, maybe some more money now available with middle class. In the case of like tax soaps are there, and a stable government comes back, and continuation of policy, the overall economy improves, and the NBFCs come out of the woods, and the kind of sufferings they had seen, that has also affected auto, and the lower interest rate scenario we can see now, because the inflation is at RBI's comfort zone, and over a period of time we can see a rate cut. If all this happens, maybe the demand can come back in auto and ancillary sectors.
You know, you've mentioned about how you'll be very selective within the NBFC space, which is a strategy that a lot of market experts are adopting. But we've seen that ever since the IL&FS crisis unfolded, there has been a liquidity squeeze across the sector. And, you know, it seems to be a funding crisis for all. So how does one really remain selective in a space where the underlying fundamental seems to be an inherent problem?
So agree again to some extent, but there are better NBFCs, and this crisis has shown that which are the better NBFCs, where there are better ALMs and better names. So there obviously there is a play available, and at the same time we are saying that again the private banks with retail focus as well as the corporate banks, because they also have a retail side of it. So I think these banks have a better play, and because of lower cost of fund, because of better CASA. So I think that is the first play, and the second play is the top-notch NBFCs and leave other NBFCs as of now.
What is it that you're making of this entire ethanol story, Arun? And one can see that a reflection of that play out in the stock prices as well. Be it Praj, be it Triveni Engineering, or for that matter, the entire cluster of the sugar pack as well has been holding out very well. Do you think there is any merit in looking at these pockets from an investment perspective, or do you think they continue to be trading bets?
Again, sugar sector over the years we have seen that there are so many ups and downs. So sometimes some story plays, sometimes again there are some regulatory issues, the supply side, the pricing control, and now recently this ethanol story, which has again given some kind of a win to these stocks. So we would again look at these as a trading opportunities only, and they are not on our buy list or our investors buy list as of now.
Okay, so to sum it up, Arun, can you just give us a sense as to where you would advise deploying money apart from the private sector banks? Which are the sectors that you're upbeat on?
So again, we are looking at consumption and the FMCG theme as the first theme, because the kind of, you must have seen the results of FMCG, the way they are growing, that shows that there is enough demand available, the money which is available with a rural customer, this being an election year, and MSP may be hiked and all those things, and even the urban consumers is spending more. Electrification of villages will help for white goods and electronic goods. So all this will put more money, and so that becomes our first theme. The second, obviously we are looking at IT because of more spends by the US companies, global companies, and the adoption of the digital space by Indian companies, and the kind of recent orders wins we have seen, whether all the biggies, even the mid-cap IT sector. So this is our second space. The third is the pharma. Again, the regulatory woes are over, the price erosion is almost over, and more into specialty and complex drugs. So all these three things are giving some tailwind from rupee that is available to IT sector also. So this becomes our third sector. And then obviously private banks I have already spoken. Apart from that, we are looking at textile. Again, India getting more orders from US now because of this US-China trade war and all. Maybe more business will come if something happens, and we are a better wage player and better competitive forces. And chemicals again, because again West is shifting to East. There again India has an advantage. So these are few areas where we'll play, and some of the NBFCs I have told. So I think if this space we play for the next 1 or 2 years, this is going to do very well. But we have to be very careful, because next 3 months, 4 months, we have to look at election. You will buy in staggered manners. That's what we are telling our customers. There is some kind of a worry in the recent, like flaring up of tension on the border or something on the Brexit. Something will come, and you will get opportunities to get into market and buy at a staggered pace. Yes, but the long-term story is intact, and we are the fastest growing economy, so we are going to become a $5 trillion economy. So I think this is the right time to put small amount of money at a staggered manner in the preferred sector, as I just mentioned.
Okay, Arun, great to speak with you. Thanks so much for taking the time out and chatting with us today. Let's move on.